I think we can start now. Good afternoon, participants and colleagues. Welcome to the fourth and final session of GIZ RFPI Asia's Public-Private Partnership Dialogue using disaster risk reduction to develop climate and disaster risk insurance and business interruption for MSMEs. My name is Jimmy Loro, Senior Advisor of the GIZ RFPI Asia, overseeing Component 5, which is developing climate and disaster risk insurance for MSMEs and activities in Vietnam. Natural hazards can impair businesses, physical assets, and disrupt supply chains and business operations. Micro, small, and medium enterprises, or MSMEs, are especially important to sustain economic activities after disasters. SMEs represent 96% of all businesses and provide 62% of all jobs across Asia and the Pacific. However, they are susceptible to the effects of natural catastrophes, given their lower ability to rebound from such shocks. For one, on average, insurance covers 5% of the GDP in Asia and the Pacific regions. Despite the need, the market lacks business interruption insurance products. Some of the reasons behind this gap are that the firms are perceived to be risky, which involves having insufficient disaster risk management measures in place. In today's session, we will explore how disaster risk reduction can reduce risk exposure for firms and how this could mean for more affordable climate and disaster risk insurance, and particularly for MSMEs. To discuss this, we are joined by two speakers with their expert input. First, Mr. Yoshiki Hiruma from the Development Bank of Japan will present a unique financing program that provides lower interest rates for companies with more effective disaster risk reduction measures, the Enterprise Disaster Resilience Rated Loan Program. Secondly, Ms. Meek Villanueva, the head of emerging customers at AXA Philippines, will present how AXA has considered DRR in its insurance products. The two presentations will be followed by a panel discussion and Q&A. Just quick house rules for this session. Please turn off your microphone and webcam to ensure we have an uninterrupted and smooth webinar. And please feel free to post any questions that you have in the chat room throughout the webinar. And as moderator, I will pick them up during the Q&A, and we can all discuss this, and you may raise your hand, and as needed, I will give you the floor. Without further ado, I call on our first speaker, Mr. Yoshiki Hiruma. He is the Vice President of Sustainability Management and Director of Enterprise Resilience Linked Loan Program of the Development Bank of Japan. Mr. Hiruma's presentation will discuss JDB's rating of companies in relation to disaster risk management and business continuity measures, how more advanced DRM measures lead to lower loan interest rates and insurance premiums, how the economic benefits of DRM are quantified, and finally, how this mechanism could be applied to the design and pricing of insurance products targeted to MSMEs. Mr. Hiruma, you have the floor.
Okay, Jimmy, thank you. Can you hear me?
Yes, I can hear you quite well.
Okay. Hi, I'm Yoshiki Hiruma from Japan, Tokyo. Yeah, it's a great opportunity. Thank you. So today's my mission is to share DBJ's activity to countermeasure the disaster risk reduction and the disaster resilience in Japan. So the title is very simple: applying financial expertise to design a resilient future. So we DBJ have already many financial solutions to fitting and tackling the climate risk or other various natural disasters. So today I will mainly focus on BCM rating or BCM linked loan program. Okay, next please. So that is a theory or background. Next please. So please look at this figure. That is one of the landscapes Japan's disaster and accident history in recent 100 years. The orange color meaning the hazard type from earthquake, typhoon, pandemic, and blah, blah, blah. And the circle size is the death of numbers. We can see the top here, earthquake is one of the tail, but the negative impact is so huge that we can see. And the next slide. Next slide. So, ultimately, disaster risk reduction and risk management is this framework we can understand. The hazard is hazard. We cannot control the hazard itself. Of course, climate disaster is occurred climate hazard. We cannot manage this hazard, but we can do that social or economical vulnerabilities minimizing is we can do it. That meaning the risk management, I think. Then we risk management well, then we will getting the profit. But we can do this risk management, then we are hitting the huge damage. That meaning the economical and man-made losses. Next, please. So this framework is a very simple and technical framework for risk management and crisis management. First of all, very important approach is risk assess, number one. And the second is mainly a hardware approach, that is preparedness. And the next, number three is mitigation. Mitigation means education or evacuation training, blah, 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 blah. And number four, information is also key. What? Key component.
Can you please turn off your microphone if you're not speaking, please? Thank you.
And number five is after the incident. Then we do the damage assessment is more important. And quick recovery and reconstruct. The total management cycle is very important to manage the risk. Then the financial sector, so we are the bank. The contribution is a many phase. So next, please. Next slide. So yes, so the disaster resilience, the image is like this. So when we hit it by very huge hazard, then quickly response, recovery, and achieving the reconstruction. That meaning the build back better. So build back better is a good concept. Then we Japan, I already said, very huge natural disaster and accident hit it. But we Japan getting the big economical growth. That meaning the build back better. So I will introduce recently Japan's disaster. Next, please. Next, please. So do you know Hokkaido? Hokkaido is one of the resort area, like in the skiing, the snowmobile, blah, blah, blah. But this temperature is very, very high, not the snow resort area. And the next, please. So you know Japan is already aged country. So many aged person killed by heat stroke recently. Next, please. And so huge hurricane and typhoon hit by Japan itself. That is a crash in the container. Next, please. And this is the Kansai. Kansai meaning near the Osaka city. Hit will huge hurricane, and the Kansai airport was flooding like this. Next, please. So this is the summarize 2018 the number of deaths, earthquake, heavy rains, and heat stroke, and the typhoon and the earthquake. So many disasters also hit it to Japan year by year. And the climate negative impact is also bigger in Japan also. Next, please. So we DBJ assessment, what is the economical impact these disasters? Next, please. So we estimated manufacturing or non-manufacturing and how about the foreign visitors, tourism. The total negative impact is like this. Then, so my biggest and our biggest concern is how to minimizing these economical impact. The keyword is risk management phase is key, I think. Next, please. So, so I want to share DBJ's various solution for sustainability. So we look at enterprise intangibles asset or intangible management. For example, the first, environmental management. And the second one is enterprise resilience. That meaning disaster risk reduction and business continuity management we focus. And finally, healthy management is also key. These three lanes is our DBJ sustainability loan solution. What is the client benefit? The first, when client getting the deed rating system, we do the loan, the financial incentives. And the second is we are the management support system. Finally, enterprise using the logo mark to the IR. Next, please. So I will say BCM rating framework more. The first, this is the screening overview. We DBJ originally developed this screening system from 100 items. The section is department two department. First, disaster prevention. That means disaster risk reduction management approaches. These sections' purpose is save your life. Only save your life. So, and other section, that meaning the business continuity management from G to O. This purpose is business continuity only. So how to managing the cash flow in the emergency phasing, how to the supply of the responsibility to goods or service in the global value chain. We look at enterprise business continuity plan and management itself. We assess. And next, please. So that is BCM rating the product designed image. When do the BCM rating, the first disaster prevention rating, and second business continuity rating, then enterprising getting excellent or good or fair. Then we evaluate ranking A, B, C like this. Very simple. Then we do the ranking based finance. Next, please. That is the loan pricing images. The right side is the normal ranking, ranking C. If enterprise getting ranking C, then loan pricing developed normal, simple, normal split. If enterprise getting ranking B or A, the enterprise getting loan pricing the some incentive system. So we supported enterprise business continuity or disaster risk reduction. The self-management approach is supporting from economical incentives like this. Next, please. So of course, we are the bank sector. Our business, mainly business, is a loan or investment. But this is a key critical important in the dialogue or feedback and management support system is more and more important. That is the certificate and feedback service like this. So what is the strong point and what is the weak point? What is the PDCA? The key approaches we advise it for enterprise management. Next, please. And ordinarily, every person question to me, what is the difference of typical ESG rating and the DBJ rating? So these are the quite difference like this. Our DBJ rating is assessment method is two-way. That means dialogue-based, interview and fact check, not only the question or open data. Yeah. Second words, what is the purpose of this rating? Typical ESG rating is mainly focused on the minimizing downside risk. No, VDBJ is a capacity building or upside management direction is a very important, our value. And the cost and monitoring system is different, typical ESG ratings like this. Next, please. So that is the track record. So many client is already getting our rating system, related link loan from, of course, our main client is a big company, but small and medium sized enterprise also getting the rating system. Next. So I will show you some case study that is a small size company, but this company is a top share in the aluminum electronical separator area, Nippon Kodoshi Corporation. So this business continuity and disaster risk reduction management is so excellent like this. And the second, please. Next, please. Next is a local supermarket. So these Maya supermarket survived East Great Japan earthquake and Fukushima nuclear disaster. They survive and they serve their goods to local market. Yeah, good disaster risk and business continuity management company. Next, please. So if enterprise getting BCM rating and related link loan, then they use this logo like CSR report, integrated report, and the homepage and business card, blah blah blah. Yeah, I think financial sector is one of the information creator sector. I think so. This is the key activities, I think. And the next. So, and we organize BCM rating club, that is the inner circle. The purpose of this community is sharing the good practice, bad practice, how to training their employee, how to managing the chief risk officer. We setting the various agenda, of course, natural disaster, not only, but the cyber security, in future energy security, blah, blah, blah. Next one. So finally, yeah, that is my message. Okay, next, please. So the crisis and new normal, World Economic Forum Global Risk Team said, everyone, I am also the member of this community. So dangerous is dangerous, but danger is one of the opportunity, I think. That's meaning the concept of the build back better. Next, please. So I already said this activity is we focus on the enterprise intangibles or risk culture and or long-term innovation, build back better, the power of build back better. So I think disaster risk reduction activities in enterprise is not cost. I think there is a value in long-term enterprise value and social shared value. Yes. That's all. Thank you for your time. That is my presentation. Thank you.
Thank you very much, Yoshiki, for your presentation. Our second speaker is Ms. Meek Villanueva. She is the head of Emerging Customers, AXA Philippines. Meek has 19 years of experience in the financial sector. She has held various roles in the fields of marketing, sales, relationship management, product and business development in the banking, asset management, and insurance fields in the Philippines and Singapore. Her presentation will discuss the initiatives of AXA in catering to the needs of MSMEs across various countries. Meek will attempt to share how current climate and disaster risk insurance products consider DRR or disaster risk reduction in the pricing of insurance premiums. Meek, take over, please. Hello, Meek.
Hi, good afternoon, everybody. My name is Meek, and I'm the head of emerging customers for AXA Philippines. So we can probably go through the slides already, Jimmy. Okay, thank you. Next slide, please. So as we all know, natural disasters and climate change are real risks to low income and mass market. In the Philippines alone, we are ranked third among all countries in the world as one of the riskiest countries in terms of climate and disaster. 60% of our country is exposed to multiple hazards. 74% of the population is susceptible to the impact. Next slide, please. So in AXA Emerging Customers, it is our role and our mission to protect the emerging middle class. Next slide, please. Our vision is to make sure that insurance is accessible, affordable, and relevant to over 4 billion low-income to mass market customers across the world. And the ambition is to be the first insurer for emerging customers. Next slide, please. So in 2020 alone, AXA Emerging Customers has offered 22.3 million policies, 25 million customers served in over 10 countries, including the Philippines. Especially to note countries in Africa, such as Cameroon and the Ivory Coast, where AXA has specifically rendered services in terms of disaster risk and CDRI. Next slide, please. So providing solutions to climate change and disaster risk is a key part of AXA's mission. Next slide, please. We just want to highlight here that AXA is strongly involved in disaster and climate and disaster risk on a macro level. We are part of a global risk pool, first and foremost. And for example, in Africa, our risk capacity is specialized in a specialized agency of the African Union and provides disaster risk insurance to African nations. On a macro level, the government serves as the policyholder and AXA serves as a reinsurer, part of an reinsurance pool. Slide 8, please. Apart from that, apart from being part of this particular initiative on a macro level, AXA is actually part of a group of companies that actually look for new solutions and working with partners to ensure that apart from macro pools, we are committed to find new solutions to make CDRI happen. So we're part of the IDF, which is a public partnership dedicated to filling protection gap. It is within this group that the insurance industry, including AXA, is committed to finding solutions to address this protection gap. And this may include better risk modeling, for example, which allows to take into consideration DRR in improving pricing for insurance. Next slide, please. AXA is also taking a look at climate risk, not just on a macro level, but also for smallholder farmers. As mentioned earlier, we're actively involved in West Africa, specifically in countries like the Ivory Coast and Cameroon, where we're running projects. Basically, we're taking into consideration here, we run projects for index insurance, which puts into consideration historical data in terms of pricing in terms of pricing insurance, and takes into consideration individual indices, and to make sure that the pricing levels are optimum and priced properly. Discussions are still ongoing, though, admittedly, to make sure and to see if climate change can actually better be taken advantage of and be better considered in terms of pricing models. So it is an ongoing discussion, but it's definitely there in terms of putting this into the map of how to make things better for different countries like West Africa. Next slide, please. In the Philippines, close to my heart is, of course, our own CDRI response, which is MicroBiz Protect. So this is in partnership with GIZ and as well as Savannah Luwalier. So this particular product is specifically made for MSMEs. So it is inclusive, it's simple, and it's affordable. So what it is actually a cash assistance for MSMEs if they are hit with natural calamities and disasters. And apart from actually covering their property and their livelihood, we also cover them themselves by giving them personal accident insurance, and ensuring that they do have emergency assistance in case they need it. Next slide, please. So AXA Philippines, we have a continuing mission, and that is to really protect vulnerable segments in the Philippines. Together with our partners such as GIZ, Cebuana, GCash, Metrobank, PS Bank, and all others, we endeavor to make sure that the vulnerable segments of the Philippine population is protected. Segments such as the MSMEs, your sari-sari store owners, your low-wage income workers, your farmers through parametric insurance, OFWs, their families, teachers, transport workers, and gig economy workers. So that is essentially our mission, to make sure that they remain protected. And it is through different measures and CDRI initiatives that can make this happen for the Philippines. So I end this very short presentation with this. We really cannot stop natural disasters, but we can arm ourselves with the knowledge, and there could never be enough disaster preparedness, as lives and livelihoods really, really depend on this. And I'm proud to say that in AXA, where I work, and I'm very proud of that, take CDRI very seriously, not only through active discussions, but actually through actions. So this is a mission that we have, and this is it has started and it will continue on. Thank you.
Thank you very much, Meek, for the presentation. Now we go to the panel discussion. My first question is for Mr. Hiruma, Yoshiki. And we are actually very curious about the special financing program of the Japanese Development Bank, particularly on the interest side of the loan. So my first question to you would be, what made the Japan Development Bank consider disaster risk management in pricing the loan interest of businesses? How did the change started? Yoshiki?
Jimmy, thank you. So, okay, the trigger is 2003, maybe. At that time, we DBJ and United Nations Financial Initiative, UNFFI, held the International Conference for Environmental Financial Management Conference. Then, I already explained environmental management related loan is the first product we developed. So that is targeted, of course, CO2 or biodiversity and so on. But in Japan's situation, environmental side is a very key agenda, and disaster is also big agenda for Japan. Then we DBJ originally developed BCM rating loan program. That is our trigger of the history. So then we are the one of the public finance characteristics, mainly commercial bank to public finance. The risk sharing is very, very important, I think. So then, and our client is going to the global market. Then we supported the disaster risk management. It's also our bank's business. Yeah, that is my answer. Yeah.
Thank you very much, Yoshiki, for those insights. So really, we see that there is a huge focus on disaster risk management and biodiversity, even in Japan. I have another question related to that from Uku here. Is there a potential to develop conditional enterprise resilience linked to insurance products for MSMEs? What would be needed for this from the side of the insurers? I pose this question now to Meek. From your perspective, AXA, you said that there's a lot of programs across countries like Africa. Also here in the Philippines locally, we have those. So what do you think? Can we use this concept for insurance? Meek?
Sorry, I'm on mute. Yes, definitely.
Okay.
DRR can definitely be used. Of course, if you have robust DRRs, that means reduced risk. And reduced risk would always have a positive effect on the premiums of insurers. Now, having said that, in theory, yes, of course, we can use it. But in terms of is it being considered or do we have a long way to go to consider it? Yes. So basically with DRR, right, disaster risk can be used in a lot of ways, but we need to make sure that the DRR measures are in place to begin with. Not only in place, frameworks are in place, and it has to be followed. So basically, if we invest in proper adaptation of measures like flood barriers, or let's say reinforcing buildings against catastrophes or earthquakes, or basically investing in nature-based solution to reduce risk, these are options that we can take to make it more robust and to make the framework more effective. And if that happens, and if that basically is rolled out properly and followed, we don't see a reason why it can't be used. It could be used, and it could be a powerful tool to make sure that products are available and cheaper to the masses.
Thank you very much, Meek, for those insights. Now I come back to Yoshiki. Yoshiki, in terms of the insurance side in Japan, are you using the same principle on your loans for the insurance side in pricing for the insurance, or is it something that is beyond you? Is it only for the private insurance sector to decide? In Japan experience so far?
In Japan case, okay, Jimmy, thank you. So in Japan case, do you know Tokyo Marine or Sompo is the biggest insurance player? So we DBJ and this player is getting the business alliance based on the BCM rating. So that means very, very simple. If our client getting the BCM rating and we DBJ do the financing, then Marine or Sompo Japan company is setting their insurance interest or the rating also setting. This is a business-based approach is everyone win. Yeah. Then total negative impact is decreasing. So this is very one of the good business partnership from bank sector and insurance sector.
Right. Okay. Thank you very much, Yoshiki. I come back to the level at the micro with Meek now, because there's an interesting question here coming from Dr. Antonis. Meek, what is the main challenge of AXA Philippines, which you are facing currently in making micro DRI work, and how can GIZ help further? Not to put you on the spot, Meek, but yes, we are here.
Yes, I know. You're my partner, so you have the
Yes.
right to ask me this question. Dr. Otanes, we miss you in the Philippines. Hello, and thanks for that question. Okay, so basically, what are the challenges? Okay, in the Philippines per se, I think number one is a proper framework on a national level is definitely lacking. That's something that has not been implemented as well as we would want it to be. There are underwriting regulations of local companies or insurance companies that are even more stringent than the national DRR measures. So definitely, that's one of the challenges. Number one, the proper framework on a national level. Secondly, it's the adherence. So even if there is a framework, as I've mentioned, the adherence to these frameworks, to these DRI measures is another thing that needs to be questioned. There needs to be a dialogue as well, an active dialogue between the public sector, the private sector, as well as the insurance companies. So basically, the insurance companies were in the business of mitigating risk, of addressing risk. So there has to be that dialogue on a higher level, both in the national level with private and the public sectors, with actuaries of these insurance companies to make sure that these DRM measures are really put in place and are up to par and up to standards. Like in AXA, for example, we have our own DRR measures and regulations to go by, which may be stricter than the national level. And I'm sure other insurance companies would have the same. So you would see the disparity in terms of how insurance is actually priced. So the challenge for us I think generally in the Philippines itself is really to make sure that a proper framework is put into place and it's followed and it's reviewed. So there's just a lot of things that needs to be worked out, because then what happens is we're on our own in terms of assessing these risks and taking a look at our own DRR measures to ensure that, you know, everything is set in place, everything is actually priced accordingly depending on the risk that we're going to be taking. So unlike other countries, I've come from Singapore, where I know for a fact that on a national level, the DRR measures are impeccable. So if the base level of your national level is really good in terms of DRR measures, then all the insurance companies will not have that far off in terms of their own measures. They don't need to resort to their own data because the national data is already in place, the restrictions, the framework's already in place. So it's quite easier for them to be at parity, or even easier for them to bring down the prices, because you know that on a national level, there are adherences to these safety standards. So it really differs on a per country basis. But not with saying that it's hopeless in the Philippines. I really don't believe that at all. I think we're taking the right steps towards the right direction, but it still needs work. And it still needs to be fixed, and it still needs to have that active dialogue between public, private, and the insurance companies.
Yes, okay. Thank you very much, Meek. And in fact, actually, during our National Task Force meeting under the Climate and Disaster Risk Insurance here in the Philippines, these same agencies are in one table discussing about these issues. Like, for example, in our table, we have the National Disaster Risk Reduction and Management Council. We have the Department of Finance, the Bureau of Treasury is also our co-chair. So we're actually on the side wherein we are discussing all of these things, considering all of these things. But as you have said, it's still really a long way for the public sector. And I also go towards the discussion here coming from the chats which are sent in. There's a comment here that, to Meek, I agree to the national framework. Also, an open source CAT models can help in opening and building data for the local insurance industry. Do you agree to this one? And is AXA also developing something of this scale here in the Philippines? What are your future plans here?
On the local level, I'm not sure if we are. I'm not a technical person. I'm not an underwriter, not an actuary, or anything like that. I'm not sure if we are. But on a global level, as I've mentioned in my presentation, we are involved in these discussions globally. So specifically on the Philippines, on a local level, I'm not sure if we are, if there are any discussions at all that's happening involving us. But I can get back to you and check on that.
No worries. Okay. Now I come to Yoshiki as well. Talking about data, is data available? Well, of course, Japan is really a highly developed country. So these types of requirements, regulation, data, are these in place for you to have these decisions in terms of the loans, in terms of rates, special ratings for insurance? Or is this an initiative coming from the private sector by themselves? Or do you need, do you believe that there's really a need for regulation, or is it private sector driven? How do you see it?
Okay. Thank you, Jimmy. So the data is a very key element to future disaster risk reduction, I think. So because we DBJ also seek what is disaster risk management is value. That means the benefit and cost balance. Yeah, this is quite difficult to we grasp. Yeah. So basically, the fundamental data is more important, I think, in the global level. So of course, Japan is a very high data quantity or the quality, but this data set is not only the developed country itself. All of the world is data standardization data is more important, I think, in the future. Then our bank sector or insurance sector catching these data and setting the pricing, the premium and the interest. and what is the applicable pricing to the risks. So now we develop the data standardization and the data sharing and cost and benefit on disaster risk reduction is a key agenda or element, I think. Yeah.
Okay, so you're saying that there's a close collaboration between
Yes.
sharing of the data and standardization of the data. So it's quite
Yes.
important. So meaning in terms of the public data, it can be used for insurance as well as for credit. Yes?
Yes, that's right.
Okay. So actually, I also have here a comment coming from the Philippines, and the question and the comment is: can the DOST risk maps meet global standards for use by big insurance companies? I think I have to ask representatives from the private insurance sector here, here in the Philippines, particularly those that have set into our discussions on the National Task Force meetings, and as well as in our trainings with the OSTG risk maps. Have you had any experience with the data? Can you use it for insurance? Any experience so far from the participants, colleagues? May I call on Sir Dante Portula to share his experience on working with this data from GeoRisk, and how is the response coming from the private insurance sector? Sir Dante, are you around?
Yeah, Jimmy, thank you for putting me on into this.
Sorry for that.
Well, I would say as a first general statement, I think the platform is already a very good initiative because it is fully functional, meaning the GeoRisk platform is able to assess the different kinds of hazards and also the vulnerability and exposures of different locations across the country. I think that one is already a very good given. And then, however, in terms of utilization, my feeling is, and also my knowledge based on engagement with FIVOX, who is leading in this GeoRisk, is that this is at the moment largely used by government agencies, including the some local government units. However, my encouragement here is for the insurance industry here in the Philippines, especially members of PIRA, the non-life insurance sector or general insurance, to take advantage of this platform, because I think this would be helpful for you to understand better the risk profiles of the different parts of the country, because they have sufficient data already in this platform. The next step, of course, is how you will be able to use this information in terms of risk assessment into your equation of pricing the insurance premium. But in sum up, Jimmy, it's there. We have one insurance company that is a bit ahead of steps into this, and working now closely with the GeoRisk Philippines team.
Yep.
And lastly, Jimmy, before I forget, by the way, there is also an insurance regulation from the Insurance Commission, also formally encouraging the industry to link up with the GeoRisk Philippines team. Thanks.
Okay. Thank you very much for those insights, actual experiences from the field, working with GeoRisk, the OST, FIVOX, and as well as the response coming from the private insurance sector. And I open the floor again to further questions, discussions among the participants and our colleagues. I think I saw a hand earlier. Oh, okay. Yes, Dr. Antonis, you want to say something?
Yeah, thank you. I know we are almost out of time, but just quickly, I'd like first of all to thank very much Meek, Mr. Yoshiki, and you, Jimin, for bringing up this very exciting and fruitful session. Actually, it's more of a comment, less of a question here. The issue is now, of course, what are the next steps? And we very often look into the regulatory framework, make told about this policy framework, operations, better data, and this is already said many times, right? At the same time, there is good progress. But the question to to both panelists is, what is now the main, so to say, takeaway of discussions we are having, fruitful discussion like this one? What would you do differently tomorrow when you go back to your business? Thank you.
Thank you very much. So I return back the question to you, Yoshiki. Learning from this discussion, what would you profit, or how do you see this to change some of your perspectives in your work, and also to Meek later on?
Okay, thank you.
What would you do different?
Yeah, good question. So, so Geomap is very wonderful tool, I think. Yeah, it's great. And this session, my takeaway and the future action is climate risk is not only the downside risk, I think. I think you already know. That means the transition risk and the physical risk is not only the downside risk. Of course, the upside, that means opportunity, business opportunity side is included in, is very, very important. So we DBJ try to evaluate the total business continuity and business transition capability of enterprise in the long-term viewpoint. So this emulating is also updating with environmental and human management year by year. Thank you.
Thank you very much, Yoshiki. Now to you, Meek. What do you take out from this? What would you do different tomorrow?
I think for me, time is of the essence. At least I'm speaking for the Philippines. Yes, you're right, Dr. Antonis. The framework, everything is being worked on, and it might take time. That's my point. And I think what I want to do, or at least what we're trying to do here, is until the time that can actually happen and that can actually materialize, we need to come up with some other things to be able to help the the emerging middle class and the low income. So for me, it might be a band-aid solution for now, but nonetheless, things and products need to be set in place just so that we can address the needs of these people. First and foremost for me, possibly because that is my segment, it is to really help the vulnerable. And we don't have time. We don't have time to actually wait for all of these things to happen. The moment is now, actually. So, like for example, for AXA, we may not be there yet in terms of developing this framework globally, or having that risk pool developed globally to help premiums to go down for farmers. But what we can do is to come up with products that will help the farmers address certain things like drought. For example, if there's a way for us to help farmers in terms of coming up with products that will help them to come up with irrigation systems to assist first until the time that we can actually help them with insurance for drought, then let's do that, right? So there are things I think that in between we can do until the perfect solution comes up, but we cannot wait. We cannot wait for that perfect solution. Things needs to happen now. And in the Philippines, even through our CDRI product, Microbiz Protect, it will not be a perfect solution, but it is a solution nonetheless to help the emerging middle class and to help the low-income MSME owners. So for me, now's the essence. Time's of the essence. Now's the time. So if that can't happen, the perfect solution can't happen, let's come up with something that can help. So for me, that's the immediate solution.
Thank you very much, Meek. Very, very interesting points from your side, as well from Yoshiki, saying that climate risk is actually also an opportunity. And also from your side, Meek, that we cannot wait. Time is of the essence. We need to do something, no matter if it is not perfect. So with that, I turn over now to Uku. for the wrap-up key, the takeaways for this session. Uku, you have the floor.
Thank you so very much, Jimmy. Thank you for the amazing, the very insightful presentation, Yoshiki, of this very unique case from Japan, and also for Meek for sharing the background from the perspective of AXA. So very quickly from my side, my Uku Lilleveli, a consultant at the GIZ RFPI program. So the reason why we thought of inviting Yoshiki is that as much as we saw or found, searched, this is kind of the one the only example in Asia that actually considers in a financial product for example premiums or the interest rates. So the better companies are doing in managing their disaster risks, the less risky they are, and the better interest rates we can provide, the better potentially premium rates we can provide, and kind of this thinking behind, and the Yoshiki came here to share this. This is very insightful, and my question was also to Meek. So that of course Meek came back whether this can be applied to the MSME sector and in the insurance. It is complex. But nevertheless, I believe there is potential in kind of with more data, and of course this needs collaboration from different sides, from the public sector, from the private sector, from the companies, the potential policyholders, from the insurers, to kind of all come to the same page, and that's what we have hope to do with this. With this presentation, to kind of see what is the potential there, and what further areas should we take grasp and leverage from. I think the key takeaways, Jimmy, you very well concluded already. But as a core message that I am going home with, although I am home with the home office as we are, that we're taking away from here, are that the potential of the potential that Yoshiki mentioned and highlighted, the potential of the climate and disaster risks. Like, they are very severe on one side, but at the same time, it is potential to utilize and understand them better and take the most of it to reduce those and the residual risks. So a bit abstract, but I hope that the message came across at least. Back to you, Jimmy.
Thank you very much, Uku, for these points. We will now have a message from Dr. Antonis Malagardes, former program director of RFPI Asia 3. Dr. Antonis, can you tell us about your thoughts of this session and of PPD10? The floor is yours.
Well, thank you. Actually, I was prepared to make some despedida-like from MEFIN as I moved from Philippines, Southeast Asia, now recently to headquarters, GIZ headquarters. But sure, I can take a minute and say my three takeaways from the entire session. First of all is that we brought in a very fruitful, constructive way, the combination of disaster risk mitigation and adaptation, in particular risk transfer and insurance. And it is definitely a need for the development partners, and particularly maybe the German side, since we are working for GIZ, and BMZ is our main funder when it comes to these type of solutions, to invest more and to be convinced, of course, to invest more into this mitigation. And insurance actually is there with the private sector, and insurance should be a last resort when it comes to extreme weather events. Yeah, the insurance will not make money there; they will rather lose money. And the public sector has other priorities: health, education, infrastructure to look for. The second takeaway is that we need more research. That was clear from the keynote speakers yesterday and also from FAO today. The results are there, but these need to be channeled efficiently, yeah, and be shared in time with concrete deadlines with the public and private sectors in at least among the MEFIN countries, the 7 countries. And the last but not least is as Meg told us today, we have to go even for the best, second best solution, not wait for the perfect data to come there, not wait for the absolute accurate risk premium or pure risk premium, but go ahead and test it and fail and test again. And definitely the big companies will not go bust because they failed in one product on micro disaster risk insurance. Thank you for this. Back to you, Jimmy.
Thank you very much, Dr. Antonis, for these thoughts. And now for the closing remarks, we hand over to Dr. Volker Steigerwald, our new RFPI Asia 3 Program Director. And I think it comes as well as an introduction for you, Dr. Volker. The floor is yours.
Well, Jimmy, let me just find out, will Antonis not have the chance for his farewell message?
I hope so.
Yeah, I think as per our agenda, Dr. Antonis comes before you and you will close this event. That was what I was told based on our agenda.
Yes, but that was not yet the closing message. So the farewell message. Please let Antonis also give his farewell speech.
All right. Okay. Thank you.
Okay,
yes.
Good. Thank you.
Antonis.
I think anyway, it's also important to give the takeaways of today. So thank you, Jimmy, for the opportunity. Yes, according to the program, supposed to give some messages as despedida. So maybe, as I said before, some of you already know that it's Volker Steigerwald who took over from March 1st the management direction of the RFPI 3 phase. And while I'll be dealing with similar issues and adds on from GIZ headquarters, then location. Now, regarding this mutual exchange forum, which was we launched actually in 2013, I would say I'm humble, but the idea came from my desk. And then I got the support from my team and from the partnerships or partners from regulators. So nobody believed 2013 that MEFIN network would make it, would make it till today, reaching this public-private dialogue number 10 already, And this has been a very successful series and has been also demonstrated today that they can help. They help public policymakers, private companies, academia in this direction of inclusive insurance. So I think the achievement, and that's what I want to highlight, of this 7 to 8 years journey of MEFIN is due to the professionalism, the patience, persistence, and hard work of the team of RFPI over this period. It was the scope of MEFIN to advocate for inclusive insurance through the active involvement of insurance regulators in various Asian countries and reach out to underwriters, aggregators, intensifying the use of technology and outreach in terms of policyholders and in these 7 countries. So we did build very much on bundling life and non-life insurance, property insurance, and I believe that it allowed also microinsurance to improve, facilitate the cash flow. So to say, microinsurance is not an insurance per se. It's a formal insurance, of course, sticking to the insurance core principles that apply everywhere in the world. But at the same time, we shall keep in mind that microinsurance has an assistance level. And our effort now currently in this third phase of climate risk insurance is to bring all the arguments and data and the so to say a good justification to the private players, to the CEOs of the companies in the Philippines, Vietnam, Indonesia in particular, to bring them all this knowledge so that there is risk mitigation taking place. We heard it today and yesterday. There are measures there to be taken in order for the insurance industry, with the help of MEFIN, GIZ, BAMZ, to come up with affordable solutions. Solutions as microinsurance 15 years ago, nobody thought that they're going to make it. Philippines is worldwide a champion in terms of policy holders, no? Holding a policy on microinsurance, life and non-life. So we believe, and I finish here, that MEFIN, with the help now of Volker and the entire team in the Philippines and beyond, will make it, and helping the government of the Philippines, Vietnam and Indonesia in particular, to come up with solutions which might be not a perfect solution, but second best solution, also against floods and typhoons. Earthquake may come also, but we have to start really using the parametric efficiently, as we are now showing for business interruption of micro enterprise in the Philippines. And with this, I would like to wish to all of you good success, and I'm here at your disposal for any advice, any comments, any support. Thank you.
Thank you very much, Dr. Antonis Malagardis. Thank you for your farewell remarks. And I think we can now introduce our new program director, Dr. Volker Steigerwald. The floor is yours.
Thank you very much, Jimmy, and thank you very much, Antonis. Yes, at the start of the PPD10, I already introduced myself as a person. Let me, at this point in time, as a new member of MEFIN, and now leading GIZ RFPI 3, thank Antonis and the RFPI team for establishing and supporting MEFIN through the years. I sincerely hope that many will continue to work in this framework, although you might be aware that that MEFIN is going into a transition phase, and a GIZ-supported project, A2II, will take over part of the activities of RFPI before. From RFPI side, we will continue those activities that are related, for instance, to Tuesday with MEFIN, for the technical working group on the technology and others, until the end of 2022, when our program will come to a close. We will parallel and together with you all explore potentials how to build up sustainability. Let me thank from the bottom of my heart to all the speakers, moderators, discussants, and participants in this very lively PPD10 for their big support to this event. This most probably will be the last PPD prior to the upcoming MEFIN transition. Actually, this transition will be discussed in the MEFIN organizational meeting with the major stakeholders still today, right after we have closed this PPD. So from my point of view, let me herewith formally close the PPD10 of MEFIN, and thank you all very much for dialing in.
Thank you very much, Dr. Volker, and thank you very much as well, colleagues and participants, for your attention. At this moment, we still have 43 participants. Next slide, please. May we request for you to place in your reactions through our experience survey for this PPD10 session 4. Kindly click on the link provided by Uku on the chat box and answer these questions. And with this, we thank you very much for your time. We thank you very much for your participation, and we look forward to the MEFIN members during the organizational meeting later. Meantime, please click on the link from Uku and answer the questions to assess this activity. Thank you very much.
Thank you.
Thank you, everybody.
Thanks, everyone. Have a great
Thank you.
day.
Yep.
Bye.
Thanks, Meek. Bye. See you.
Thank you. See you.
Thank
Thank you,
you.
Jimmy.
Take care. Bye.
Thank you, Anthony.
Thanks, Meek. Bye-bye.
Shiki, thank you.
Jimmy, thank you. And Uku, thank you from Yoshiki.
Thank you, Yoshiki, as well as Jimmy for the great moderation. And happy to have you here. Happy to have Meek here. Happy for the for everybody's contribution. I think that there were great takeaways and great content, especially
Thank you so much. Okay, please keep in touch. Okay.
Okay.
Most definitely. I will write to you afterwards as well with a lovely thank you on the email.
Oh.
All right.
See you. Bye bye.
Take care, everybody. Bye bye.
Bye.
Uku, I think the link doesn't work. Uku.
It doesn't work.
Yep. I tried to click it, but.
So I think that you should copy paste it. Okay. It didn't come as a link, but I think it's fine. I think people found it nevertheless.
Okay. Yeah. I have to click it. I mean, paste it. Anyway, thank you very much all, and stay safe. Stay healthy.
Anthony's is muted, but I think Anthony's wanted to say something.
Expect, of course, very satisfied, right? And those who put just satisfied, they have to justify it. Take care.
Okay. Thank you.
Joke.
Bye.
Bye.